One thing that nefarious game publisher Electronic Arts has failed to understand over the last few years is the importance of consumer goodwill. They've been able to get away with many of their monetization schemes at the expense of consumers relatively unhampered for years, and it wasn't until Star Wars Battlefront 2 that the pot finally boiled over. In response to the mass backlash against that game, the company promised that they have learned their lesson and that they would do better moving forward, but 2018 has proven that these were empty words. Egregious microtransactions and loot boxes continue to flow through EA's most financially lucrative titles, namely FIFA 19 and their various mobile games, and they're so keen on nickel and diming players through glorified gambling that they're willing to take Belgium to court in defiance of their gambling regulations and consumer protection laws. And then there is Battlefield 5, a game that had all the makings of a successful project before EA butchered its marketing and released what ultimately turned out to be a lackluster package. The result was that the game woefully undersold from what the publisher had anticipated, and it's caused a ripple effect of financial woes for the gaming giant. To give us a broad picture of how this game has performed is an article published by website Seeking Alpha on December 19th, 2018, with a headline that reads, quote, "Electronic Arts expect additional estimate reductions as Battlefield 5 sales disappoint." Disappointing sales for the title shouldn't come as much of a big surprise, as early pre-order figures were pretty indicative of an entry that would fail to garner the same level of commercial success as past entries. The result is that this has led EA to revise their earnings projections for fiscal year 2019. According to Seeking Alpha's article, outlook was lowered from $5.55 billion to $5.2 billion, so by about $350 million. Now, in the grand scheme of things, this may not seem like a big difference for onlookers. I mean, $350 million seems like chump change when they're still expecting to earn $5.2 billion, right? But what you have to understand is that the lifeblood of corporations like EA is stock value and investors. And what investors look for in a company is signs of year-on-year growth so that the money they put into the company will increase in value. If there are any signs of EA's earnings projections faltering or even stabilizing rather than showing signs of tangible growth, it will spook investors off and cause the company's stock value to decrease, and seeing a downwards trend, other stockholders will be tempted to pull out as well, and it becomes this vicious cycle. And from the looks of it, Battlefield 5's poor sales has been detrimental enough to the company's revenue projections to scare away a significant number of investors. As the article put it, quote, "Since peaking in July, shares of Electronic Arts have fallen over 45% and set a fresh 52-week low on Monday. Though the broader technology market has suffered in recent months, EA's outsized declines are caused by concerns over unit sales of the company's tentpole Battlefield franchise." Indeed, one look at EA's current stock figures will reveal a huge dip starting from July 2018, and currently EA stocks are the lowest they have been in 2 years. In just a few months, the company's stocks have dipped at a rate and scale that's plain and simply unprecedented for the publisher. From its highest peak in July 2018 to its lowest valley in December 2018, according to my calculations, the company has lost almost $21 billion in stock value, which I don't have to tell you is no paltry sum. Now, Battlefield 5 officially launched on November 9th, which is a few months after stocks began to dip drastically, but signs that the game would not meet sales expectations could be spotted early on. As the article aptly pointed out, optics against Battlefield 5 suffered early due to backlash resulting from a blatant injection of politics that paved the road to a bizarre and inauthentic portrayal of World War II as seen in the game's announcement trailer. And then during E3 2018, former Chief Design Officer of EA Patrick Soderlund made a comment generalizing those critical of Battlefield 5's direction as uneducated, while telling them to either accept it or don't buy the game. But one pivotal moment for concerned investors was when EA announced at the end of August that Battlefield 5 would be delayed by a month from October to November. This came shortly after an article from CNBC reported that Battlefield 5's pre-order sales were behind competitor Call of Duty Black Ops 4 by as much as 80 85%. It didn't take a genius to read between the lines. The delay, coupled with poor pre-order sales, suggested Battlefield 5 was falling way behind titles such as Black Ops 4 and Red Dead Redemption 2, which held their ground despite the tough competition they faced throughout October. Battlefield 5 then finally launched throughout November, with access staggered based on whether you subscribed to Origin Access Premier and which edition of the game you ordered. Generally, players were disappointed to find that the single-player campaign was quite limited and that the primary focus, multiplayer, noticeably lacked content and modes, giving off the sense that the game was released in a state that felt unfinished and half-baked. Investors were disappointed to find that initial physical sales in the UK for Battlefield 5 were drastically lower than those of Battlefield 1, and while part of that can be attributed to the rising trend of digital sales, the disparity was too wide for this to not be indication of overall waning sales. Another sign that indicated poor sales was the fact that, as Seeking Alpha's article pointed out, Battlefield 5 was discounted much quicker and on a grander scale than usual, and it continues to stay on sale. Indeed, if you go to GameStop right now and check out listings for Battlefield 5, you'll see that the game has been discounted by 50% across the board, and some retailers have apparently gone as far as slashing the game's price to be 33% of the initial cost. That plain and simply wouldn't be normal if the game were actually selling well or even selling decently. Something else that Seeking Alpha pointed out was that Battlefield 5's Twitch viewership has generally been lower compared to the competition. Fortnite having more Twitch viewership than the other three games combined comes as no surprise. But Black Ops 4 having been viewed 22.5 million hours over 30 days compared to Battlefield 5's 6.3 million is pretty telling of a stark difference in sales figures and engagement. Granted, Red Dead Redemption 2 has relatively lower viewership despite massive sales, but keep in mind that the title is primarily a single-player experience, with online only just starting to trickle in, so lower Twitch viewership numbers for this particular title are to be expected. Now, one piece of important data that Seeking Alpha's article doesn't mention is US sales figures released for the month of November, which reveals that Battlefield 5 only placed third. While third may not seem like such a bad place to be, keep in mind that both second and first place titles were released a month prior in October. To be fair, Red Dead Redemption 2 was released in late October, so one could argue it is within range of competing with Battlefield 5, but Black Ops 4 was released a solid month before Battlefield 5. So the fact that we're seeing Black Ops 4, a game that was released in October, beating Battlefield 5 sales during its own November launch month is pretty telling of just how far behind Battlefield 5 is lagging. And hell, Fallout 76 did even worse, and the only reason Pokemon isn't higher up on the list is because Let's Go Pikachu and Let's Go Eevee are being counted separately. Offering even more clarity is year-to-date data, which accounts for sales figures from January 2018 to present day. Notice how titles like Black Ops 4 and Red Dead Redemption 2, despite the short time that's elapsed since their launch, are all the way in the top 2, whereas Battlefield 5 is nowhere to be found on this list. It might have sold enough copies to make it to the top 10 list of its launch month of November, but its lifetime sales still don't come close to some of these more prominent titles. To make a long story short, things are looking pretty bleak for Battlefield 5's prospects, and it's scaring away EA's real customers, the investors. Even without the latest sales figures, Seeking Alpha's article provided a less than stellar outlook for the bleeding company. It's worth noting that Seeking Alpha is a website that primarily focuses on news related to stocks and businesses, with their primary audience being investors, so part of what they do is provide recommendations for companies worth investing in. As far as EA is concerned, here's the conclusion that they provided. Since August, analysts have reduced fiscal third quarter 2019 revenue expectations from an average of over $2.2 billion to under $1.8 billion. As discussed above, company guidance for the entire year was reduced $350 million to account for exchange rates, lower mobile expectations, and the pushback of the Battlefield 5 launch, while analysts are factoring additional declines due to slower sales for EA's key holiday franchises franchise, they're likely underestimating the shortfall versus the 13 million unit forecast. Additionally, Battlefield 5 is not aggressively monetized with in-game content and is already selling at a discount. Lastly, when comparing net bookings from the year-ago quarter, also note this year's slate of smaller titles is weaker. As hard sales data comes forward in January, look for additional downward revenue revisions from analysts and corresponding pressure on the stock price. In other words, Seeking Alpha believes that despite projections having already been lowered drastically throughout the months leading up to Battlefield 5's launch, the game will do even worse than what current conservative forecasts may suggest. Taking everything into account, the article is essentially telling investors to expect even worse results, warning to look for additional downward revenue revisions from analysts. It would seem as though EA didn't expect their PR blunders and their disregard for quality with Battlefield 5 to affect the game sales this badly, but I guess that's to be expected from a company that's been underestimating community goodwill for ages now. While tough competition throughout October has a part to play in these less than ideal financial results, I would say Battlefield 5's undesirable direction, EA's poorly conceived responses, the lackluster marketing, and the general notoriety the company's built up over the years were primary factors that ultimately led to Battlefield 5's failure and the ongoing financial downfall. So long as EA continues to rely on predatory practices for short-term financial boosts, rather than rely on the virtues of corporate and artistic integrity to bolster their business long-term, they'll keep hemorrhaging loyal customers and interest for their products. The EA brand will become synonymous with products expected to be compromised by shady caveats, rather than with products one can feel safe purchasing, knowing a marvelous experience awaits. These are one man's thoughts and opinions anyway. I'd love to hear what your take is on the latest data regarding Battlefield 5's commercial performance and EA's financial situation in the comments below. With that, I would like to end this news update. Thank you for tuning in. If you enjoy my content and would like to support this channel directly, consider donating on Patreon. And to be further updated on all things gaming news, reviews, and discussions, stay tuned right here on Young Yeah. I'll see you guys next time. Young out.